This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney, where the market has just opened. The top stories this hour. The French finance minister tells Bloomberg exclusively that the government will not be blackmailed over the budget. Opposition lawmakers could call for a no-confidence vote as soon as Wednesday. China's latest factory activity showing continued expansion, but the outlook remains unclear with trade war risks looming. And coming this week, US payrolls will be scrutinised for any risk sentiment, and PMIs in Asia will shed light on the region's economies.
Asian assets setting up like this right now after we continue to see strengthening for the Japanese yen, right now holding below that 150 per dollar level. Of course, we're talking about a 6-week high against the US dollar, especially after we heard comments from Governor Ueda of the Bank of Japan talking to local media here, signaling that we're approaching rate hike. So we continue to see Nikkei futures right now unchanged. We'll see what happens at the open. We do have some eco data out of Japan, including capital spending. We already had that data, as you mentioned, Heidi, when it comes to factory output in China, with the PMI numbers continuing to expand. Right now, the offshore yuan holding at that 725 level against the US dollar. Talking about the US dollar, take a look at how futures are setting up, because we saw the first week of declines after 8 weeks of gains for the greenback. And this, of course, as Treasury yields continue to decline across the curve. When it came to really the U.S. stock market, we are continuing to see that upside. We're talking about fresh record highs, $140 billion poured into U.S. equities for the month of November, Heidi, to make it really the best of the year. We'll continue to watch where economic data heads from here. We have jobs data this week. We are expecting the non-farm payrolls to have advanced more than 200,000 already. The unemployment rate at around that 4.1%. And of course, we'll have more indications of that jobs data assessment from the Fed chair himself, who's speaking at a moderated discussion this week.
And of course, Shery, we're not just watching the US economy as well as, of course, some of the other goings on. There's a lot of uncertainty, right? Not just when it comes to the domestic economy in the US, but of course, the incoming Trump administration's policies, as well as how, various bodies and various sort of market segments, including oil, will react to that. OPEC Plus, of course, pushing back that decision that should have been made on the weekend, really suggesting that there's still some degree of consternation and perhaps disagreement on how to proceed on managing output, given the uncertainties for the global economy next year. We're also watching Europe very closely, where fiscal concerns continue to be front and centre for France. We have really seen just the increasing political pressures, the crisis there domestically, the Prime Minister, Michel Barnier, facing a potential no-confidence vote over the 2025 budget. We have seen those concessions when it comes to tax policy, easing tensions a little bit, but Marine Le Pen's Monday deadline for further demands really looms large, and it's been extraordinary in terms of how much power we've seen really being accumulated by the far-right leader. We did speak to the finance minister over the weekend and take a listen in terms of how they're planning to go into further negotiations, saying they won't be blackmailed over the budget, saying that he's still committed to hitting the government's 5% budget deficit target next year, even after warnings that an amendment would cost over $10 billion.
We respect each and every MP, and we respect each and every people in France, whatever they decided to vote or not to vote, of course. But what's my responsibility as a finance minister is to commit to the 5% target that we decided to have at the beginning of our mandate, not only for France or for the government, because it's now needed in order that Europe still remain a country, a continent of prosperity. That's what we aim at. And for that, we need all political leaders to be responsible.
With these concessions that we've seen in the budget, they're going to cost about 10 billion euros. Does that mean you can actually keep this 5% deficit target? Or do you believe perhaps it will be slightly higher, like 5.5, or perhaps higher?
As I told you, our commitment to reduce the budget deficit towards 5% in 2025 and towards 3% in 2029 is not an option. It is something we are very carefully looking at. What does that mean?
But can you actually fulfill this?
Yes, it means that at every time that we made adjustments on our budget, we compensated it with saving, with new measures. It's clearly an important point to underline here. We are committed to this 5% target in 2025.
French Finance Minister Antoine Armand there speaking exclusively with Bloomberg's Caroline Conan. Let's get some more perspectives when it comes to this story as well as the broader outlook for the global economy. Joining us now is Alicia Garcia-Herrero, who's the Chief Asia Pacific Economist at Natixis CIB. Alicia, always great to have you with us. And, you know, it's interesting in sort of the microcosm through which we look at the situation in France, right? Political division, fiscally weakened there at a time when a lot of these countries are also gearing up to deal with a lot of uncertainty from the incoming Trump administration.
Well, that's exactly right. In a way, it's really difficult to understand how Europe is going to keep that fiscal restraint, which comes from basically the approval of fiscal rules in 2023, end of 2023, barely approved. And, you know, the problem with this is that nobody else is having any fiscal restraint. Trump will not. China will not. So only Europe is going to do that. And this is very, very difficult for Europe. So I think, you know, frankly, asking 5% for France in 2025 is bold from the government, but it might not be feasible. And that's not only because of France or Europe, it's really the general trend in fiscal policy globally.
It's interesting you talk about the lack of restraint as being something that, you know, either in response or through a broader global trend is going to be pervasive next year. What does that mean for the global economic cycle, do you think, over not just next year, but perhaps the next few years?
Yeah. Well, we're going to have fiscal problems. We don't know where they're going to start. I think Trump will get, you know, what is delivered when you do fiscal stimulus beyond where we are already in the US, which is a strong dollar, not what Trump wants, but that's what he will get and what he's getting. I think for the US to have financing problems is too early. I think, you know, the US will attract a lot of capital because he will cut taxes and that will help. But in the long run, of course, this is problematic. I think the first ones to feel the pinch of this lack of fiscal restraint will be emerging economies, frontier markets. I think that everybody has been riding on a Fed that would finally ease aggressively, but the Fed might not ease aggressively anymore. So, you know, these countries are already like strangled somehow with hoping for cuts. And some are even cutting because they can't wait, but others aren't able to cut because the currencies are weakening. We see a lot of weakening of EM currencies at the moment. So those will be the first to see what it means not to have done fiscal restraint on time. And I'm expecting a lot of these EM and frontier markets to suffer indeed.
And it's not just emerging market currencies weakening, right? I mean, we're coming from these comments from the finance minister in France, but the euro has just capped the worst month in over a year already. And we saw the euro take another dip lower coming from that French political volatility. Where does the U.S. dollar go from here when you also have the pressure on the other side of the trade with a weakening potentially European economy and more ECB rate cuts to come?
Yeah, well, we had some comments from the European Central Bank, from Ishiba, basically saying that, you know, the ECB might not be able to cut as much as for this reason, because they're seeing that first, the euro is already very weak. We have these issues with the French budget. We have elections in Germany. So, you know, we might not be seeing as many cuts as expected, even for the European Central Bank, for the reason you mentioned. But I think, on the other hand, the euro is weakening also because everybody is counting by now on tariffs. If Trump put tariffs on Mexico and Canada, basically with a free trade agreement, just imagine Europe or, you know, anywhere else. So I think currencies are weakening in the light of the need to be weaker to withstand tariffs from Trump. So it's a mixture of, I think, political uncertainty in France and Germany and the need for a weaker currency in the light of Trump's tariffs. That's what it is.
When it comes about the health of the U.S. economy, what sort of indications are you getting from the holiday shopping season, especially when it comes to, of course, the American consumer that's so important for the broader economy?
Well, we need to wait. I think the key data is yet to come. I really want to see this employment data after the distorted data because of the storms. Because the consumption data is kind of hard to read now, I have to say. I mean, everywhere in the world, we had very positive consumption data in October for China, and nobody understands how that could happen because, the mood is so negative. And I think in the US, it's a little bit like that as well. So I think we need to wait for employment data to happen because we missed a month. We couldn't read that month to really know what the Fed might be doing. But the Fed knows that it will need to deal with with much more expensive imports from, by now, literally all over the world. Mexico is the largest import market for the US, and we are going to have tariffs. So the Fed will have to count on all of this, no matter the consumption data or even the employment data, because their inflation outlook will look worse. That's clear.
Alicia, do stay with us. Alicia Garcia-Herrero, who's a Chief Asia-Pacific Economist at Natixis CIB, will be along with us. We want to talk a little bit about China next. But in the meantime, let's take you to what we're seeing live scenes in Georgia at the moment, where protesters there are demonstrating in the nation's capital for a fourth straight night against the government's decision to suspend negotiations to join the European Union. Now, these protests follow the ruling Georgian Dreams Party's disputed victory in the election, which took place on October 26. The EU and the US have both condemned the ruling party's actions, saying there are going to be direct consequences. The US has suspended its strategic partnership with Georgia, and this, of course, as we saw the Georgian president calling a special Russian special operation, I should say, to thwart Georgia's EU and NATO goals. So continuing to vow to defy the ruling party's plan to replace her, as we see riot police in these protests using tear gas, water cannons to disperse protesters during a second night of demonstrations in the capital. And we're seeing the protesters there, including those gathered in front of the parliamentary building in the capital, as this continues to play out. We'll bring the latest as the details get to us. More ahead on the Asia trade. This is Bloomberg.
Take a look at the currency space after we saw the U.S. dollar seeing its first weekly loss in 9. This, of course, after incredible strength in the U.S. dollar and expectations of where the Fed goes from here. But we had a lot of volatility last week, especially with Treasury yields falling and new threats of tariffs on key trading partners coming from President-elect Donald Trump. So we had a lot of volatility in EM currencies, especially with the Mexican peso really slumping and rebounding all of last week. The offshore yuan also last week at one point touching a 4-month low against the U.S. dollar. Now we have President-elect Trump coming out again and threatening more repercussions for BRICS nations if they veer away from the U.S. dollar and create an alternative. They want a commitment from these BRICS nations to continue to use the U.S. dollar. We'll continue to see what the pressure and fallout we see in the Asian session when it comes to Asian currencies. But potentially we could see a little bit of support for the yuan. China's official PMI on Saturday showed gradual improvement in the economy after a broad stimulus package helped reverse months of contraction. Let's bring in our China correspondent, Minmin Lo. Minmin, so how positive or encouraging were these numbers?
Yeah, actually, it's a little bit mixed here because, yes, we did get a second straight month of expansion in the manufacturing PMI, but bear in mind that October was a shorter work month because of the Golden Week holiday. So typically, we do get a 0.2 to 0.3 point bounce in November historically. So if you strip away that seasonal effect, we're actually seeing the November factory activity expanding at a similarly gradual pace as the previous month. So the numbers came in at 50.9 50.3, up from 50.1 in October. And if you look at the non-manufacturing PMI, that fell to 50. That's the borderline between expansion and contraction. If you look at the construction sub-index, that contracted for the first time since February of 2020. The employment gauge as well deepened contraction, suggesting that factories are still quite unwilling to hire workers. And the input and output price gauges as well continuing to fall, suggesting that we still see this deflationary pressure going on. Services PMI was flat. So overall, you're seeing that recovery is still pretty fragile here as we wait for the stimulus to take hold in the economy.
And is that fragility expected perhaps to be more expressed in the private sector with the Caixin PMI that's due out later today?
No, in fact, the Caixin PMI, we're expecting quite a strong number. 50.6 is the consensus forecast. That's the strongest in about 5 months. That's largely going to be boosted by new export orders, because we already did see that export was surging to a new high since 2022 in October. This is because exporters are front-loading shipments ahead of the Christmas holiday, as well as to mitigate the impact of any potential Trump tariffs. So the expectation there is that the private index there is going to show a stronger reading, because the Caixin PMI tends to capture the smaller export-oriented firms rather than the state-owned enterprises.
Our China correspondent Min Lo there. Let's bring back Alicia Garcia-Herrero, who's the Chief Asia-Pacific Economist at Natixis CIB. Thanks for sticking along with us. And so we've been kind of trying to be patient when it comes to how these stimulus measures have started to kind of percolate through, particularly when it comes to some of these private companies, right? How sustainable do you think this sort of nascent rebound will be? And how does kind of the fiscal side potentially change if Beijing is looking at, needing kind of firepower for the next 4 years, depending on what President Trump does?
Okay. So I'll be blunt and brief. We're not expecting a rebound at Natixis. And why? Because the stimulus is not a stimulus. It's a restructuring package, it says, which is very welcome, by the way, because China has all of this hidden debt. Local governments are excessively indebted. This percolates into the economy, and any supplier from local governments is still waiting to be paid. So, all of this is welcome, but it's not really a stimulus package in the way we understand it, comparing it to 2008 in any form. So, we are going to have lower growth in 2025, maybe mitigating the deceleration, though, thanks to the package. So we're around probably 4.5 in 2025. So no real recovery, unless, and by the way, and this is still not counting on massive tariffs. So basically, if Trump behaves nicely, I wouldn't say a trade deal, but at least tariffs that are not too different for China, as we're seeing so far, given his announcement on China versus Mexico and Canada, we would see that type of growth. If, however, the party feels that they need more and they come with a big stimulus, this time around consumption-based stimulus, then that would be a different ballgame. But frankly, I think they would be very hesitant, because the actual official debt in China will go up by 8 percentage points of GDP, only because of this 10 trillion RMB package only. So, the official debt is really going to increase. And I think they will be very careful to have a big bump in public debt with an additional consumption-based stimulus.
So what do you see as being, I guess, the sort of flow-on effects when it comes to China's trading partners, right? We're already seeing this sort of flurry of front-loading effects, and we're seeing that from some companies that trade with China as well. Do you see that sort of level of, I guess, the green shoots that we have at the moment being sustained on that front as well?
So there's two types of green shoots. One is on the consumption side. In October, we had good numbers, but it was mostly the Golden Week. And the first 10 days of October were, stock market flurry, and everybody was, thinking it would last. It didn't last. So I think I'm expecting worse consumption numbers in November. PMI, I think, is very much driven by export orders, and these are coming because of tariffs, and therefore they're not sustainable. So I actually think China's growth next year will be hurt mostly because of a smaller contribution of external demand. And this is tariff related, not only the US. If you look at the number of countries so far, even Russia, latest news, the number of tariffs China will be confronted with next year will be humongous.
What will that mean for trading partners across Asia? Already last week, we're surprised to see the Bank of Korea actually cut rates. That was unexpected. We saw the RBNZ also cutting rates. It seems that the economic outlook across Asia might not look as encouraging in 2025.
Yes, exactly. And I think there is an important reason for this. We think substitution. Yeah, we think, okay, if China is hit by tariffs, somebody else will export to the US. But South Korea was already banking on that. This was the IRA. South Korea had kind of a special access to the US market, which China didn't, through basically access to subsidies. And that is very likely to be stopped by Trump. So the gain that we could have seen for South Korea is actually not going to be there. And then in general, the whole region is decelerating. India is decelerating. China, as I said, even with this stimulus, so-called stimulus, will be decelerating next year. So, it's just only natural to and by the way, the U.S. economy still, no matter what Trump might do, we still hold the view that there will be a deceleration. Europe is not doing well. Why would you have an exuberant Asia? I can understand the feeling of many of the central banks that they want to cut. It is logical. The problem is some might not be able to cut because their currencies may be too weak. And that is when we hit the wall for some EM Asia.
Yeah, I hear a lot of caution coming from you, Alicia. Good to have you with us. Alicia Garcia-Herrero, Chief Asia-Pacific Economist at Natixis CIB. We do have more ahead on the Asia trade. This is Bloomberg.
We are taking a look at a couple of big movers when it comes to Australia in the mining space. That's De Grey Mining as well as Northern Star. Pretty different trajectories, as you can see. De Grey Mining up by almost 28% there. Northern Star is set to buy De Grey Mining in a $5 billion Aussie dollar gold deal. So the takeover will give Northern Star full ownership of the Hemi project, which is a low-cost gold asset located in WA. It's expected to produce 530,000 ounces of gold per year on average for the first 10 years. So this is really a move to secure more supply amid soaring prices of gold, particularly of late at the moment. And that increase of ore supply is key for Northern Star, which is Australia's biggest listed gold miner. We're seeing broad flatness across the ASX so far. This is Bloomberg.
French Finance Minister Antoine Armand tells us exclusively the government will not accept artificial budget deadlines from far-right leader Marine Le Pen. That's after Le Pen gave her strongest indications yet that she'll topple the administration as soon as this week.
This government, in the last week, has clearly demonstrated its willingness to ensure that France could have a budget through evolution in the budget. And let me remind also that the parliamentary debate is still ongoing and we have to wait until the end of this debate. But as you said, France is at a critical time. We have the arguments, we have the fundamentals. We have a perspective to reduce public spending and to cut borrowing, which is very important for France, but for Europe as well. So let's remind the political leaders in France that we have a common responsibility and that this common responsibility includes voting, adopting, passing a budget.
Does that mean there's going to be more compromise, more concessions before Monday night, which is the deadline that Marine Le Pen has given you?
As I said, the French government doesn't take ultimatums. It's looking at the French parliamentary debate. It's respecting each and every parliamentary debate that leads to an evolution. We will take into account what is changing, but we won't be blackmailed. We are committed to reduce the deficit.
I understand you're willing to perhaps compromise, but Marine Le Pen has some specific concessions she wants from the government, including that all pensions be indexed on inflation as soon as January. And she also wants the government to give up this plan to abandon some drug reimbursement. On these two specific topics, is there any way to have more concessions from the government?
Let us not just focus on the Rassemblement National, because as you know...
but it's key.
It's key, but it's not enough. And as you say, for a vote of confidence to be adopted at the French Parliament, you would need to have the Socialist Party, the left parties, to vote with the far-right parties. So it would not only be the responsibility of Marine Le Pen's party, it would also be the responsibility of French socialists, French ecologists, people who are willing to oppose to Marine Le Pen, to vote together. It would be a very bad signal politically and economically for these countries, for our country, and for these parties who are saying and claiming that they could stay government parties.
Does that mean you're trying to negotiate with the Socialist Party, not the National Rally?
No, we are not focused on with whom we negotiate or not. As I said, the government is a government of dialogue, of respect, of co-construction. This budget has been co-constructed. It's not the result of just a government project. It's evolving within the days and the weeks of the parliamentary debate. Will still be open, but not to blackmail.
French Finance Minister Antoine Armand there speaking exclusively with Bloomberg's Caroline Conan. Some geopolitical stories that we're following this hour, and the Syrian military is pushing to rush back insurgents who have seized the city of Aleppo. According to AP, the airstrikes have hit the cities of Idlib and Aleppo, killing at least 25 people. Iran has pledged to help Damascus counter the offensive. Tehran is a key political and military ally of Syria and its long-running civil war. German Foreign Minister, Annalena Baerbock is accusing China of providing Russia with weapons for its war against Ukraine and threatening European peace. She says she'll discuss this issue with her Chinese counterpart Wang Yi during her two-day visit to Beijing. Baerbock is also expected to discuss EU tariffs against Chinese EVs that were introduced in October, Shery.
And Haidi, about 200 nations have failed to agree on how to curb plastic pollution after 2 years of divisive negotiations. A week-long UN-backed summit in Busan, South Korea, ended early Monday without a legally binding deal to regulate the production and use of plastics. Bloomberg's climate reporter Aaron Clark joins us now with more on this. And Aaron, we know that a majority of countries actually supported an agreement. So what happened?
Yeah, there's really widespread popular support among the public and also in the business community for a legally binding treaty that limits plastic pollution across the life cycle of plastic, which includes production, use, and disposal. There's a business coalition that includes multinationals like Coca-Cola, 3M, and Starbucks that were in favor of a legally binding treaty. And the majority of nations want that too. That was very clear during these negotiations. But what we found is that there was a very small minority of countries, of oil-producing countries, that really derailed these talks. And these are led primarily by Saudi Arabia. The concern is that if you begin to reduce plastic production, which is what the majority of countries want, then you could impact oil demand in the future, and a lot of oil companies and oil producing nations see plastic production as a growth area for oil, especially in the energy transition as we see a shift away from gasoline and diesel-powered vehicles to EVs. So that was what happened. There was a vocal minority who really delayed derailed the talks, this round of talks, and And but there was a little bit of progress made. There was agreement at the end of these talks that there's sort of a new draft, a new proposal around which future talks will be based. So I think there was, an idea, a consensus that some progress had been made, but there's still quite a bit of difference between the majority of countries that want a legally binding treaty and this small group of oil-producing states.
And this failure in the negotiations seems particularly stark when there's so much new evidence and focus on microplastics and how this is seeping into ecosystems and communities, right? So, what potentially happens from here? Do we see kind of more progress when it comes to what individual countries and I guess bilateral groups perhaps are doing?
Yeah, and that's a great point. I mean, this is really about a public health concern. This is not about plastic, sort of plastic and whales' bellies. I mean, that's part of it, but it is a human public health concern because plastic production is forecast to increase about 60% by 2040. So you'll see an influx, even though some of that will be recycled, probably only about 10%, but you'll see a huge influx of a lot of that material, especially the single-use plastic, getting into natural ecosystems, whether that's terrestrial or marine-based systems. And we know that when that happens, the plastic breaks down into microplastics, it gets into food chains, and then it gets into humans. So there's tremendous concern and about the chemicals that are used in plastics and the health impacts. We know that they can impact things like IQ levels and obesity, cardiovascular disease, cancer, et cetera. So I think going forward, the talks are going to continue to revolve around phasing out some of these dangerous chemicals that are used in plastic production and trying to cap production so you actually limit the amount that's being used, especially around single plastic, and the amount that's going into the environment. Talks are scheduled to resume sometime next year, but I think that those two issues are going to continue to be debated when these countries meet probably mid next year.
Bloomberg's climate reporter Aaron Clark there. More ahead on the Asia trade. This is Bloomberg.
Take a look at how Japanese assets are setting up right now. Of course, the equity markets will open at the top of the hour, but this as the Japanese yen now is holding at around that 6-week high against the U.S. dollar. We had some incredible strength overnight. In the past few days, in fact, we are surpassing that 150 level, and at one point we fell to 149. We had the BOJ governor in a local interview talking about rate hikes being near. So we continue to watch the inflation and economic trends develop in Japan. Singapore Nikkei futures now unchanged at the moment, but this, of course, after losing ground in the previous session. And, of course, we're also trying to really gauge the impact of the new extra budget that the cabinet has just approved. Japan is allocating another $9.9 billion to boost its chip and AI endeavors as part of Prime Minister Shigeru Ishiba's pledge of $65 billion to support the industry. The additional budget to fund Ishiba's stimulus plans were approved by Japan's cabinet on Friday and is expected to pass parliament by the end of the year. For more, let's bring in Japan economy and government editor Brian Fowler. Brian, good to have you with us. What did we see in this extra budget?
Well, there's a lot in that budget. It's not the most revolutionary package, but there's really something for everything. You've got cash handouts for low-income households. You've got funds for subsidies to put a cap on utilities to mitigate inflation. There's money in there to give incentives to companies to continue with wage increases. And then there's also money for to pay interest on loans so that homeowners can bulk up their houses against potential earthquakes. So it hits a lot of points. There's also, of course, as you mentioned, the AI and semiconductor investment money too. So, I mean, there's something to really hit every part of the economy. Of course, the downside is it's going to be a setback for fiscal reform. Japan's debt to GDP ratio is set to hit about 250%. And all talk of the primary balance surplus that had been planned for next fiscal year seems to have cooled off a bit. The finance minister of late has been saying it's too hard to say what that's going to look like next fiscal year.
How does this budget sit, I guess how comfortably or not does it sit with the broader monetary policy position, right? Because we did hear from Governor Ueda saying that, the time for more rate hikes is nearing.
Yeah, absolutely. So, that was a very interesting interview that you're talking about there. So that's the key point. The time is nearing. So the definitive takeaway from that is that if you had any doubts until now, there's no reason to doubt that we'll see the hike at least in December or January. In our last survey, 80% of economists said that. So about 20% of economists probably need to move up their timelines to reflect the latest comments from Ueda. I think there's a pretty good chance that they will hike in December, but we won't really see that until he appears before Parliament. Sometime in the next 2 weeks, he'll be called to testify about monetary policy. And at that point, you can bet he's going to give a very definitive answer. He's going to make it very clear to us so that there's no surprises in the market either way.
Japan economy and government editor Brian Fowler there. Now, our next guest says additional spending through a supplementary budget to boost macroeconomic demand is unnecessary and could actually worsen inflation for Japan. Joining us now is Motohiro Sato, Dean and Professor of Graduate School of Economics at Hitotsubashi University. Great to have you with us here in the studio.
Thank you for inviting me.
So, you say that it's unnecessary, and I think a lot of people would agree because we are seeing the economy, for example, doing better, and we're seeing inflation trends come in. At the same time, because Ishiba-san has a minority government, it seems that it was politically inevitable. What do you make of this calculation between politics and economics?
Yes, indeed. From the economics perspective, we are now experiencing inflation, and the GDP gap is mitigating. So, but things that we are actually getting out of the deflation. But on the political side, of course, the government is now minority, so they got to make a compromise with the opposition party. The opposition party are arguing that more support for low-income people.
Does that make for a more fiscally irresponsible government?
Yes. Our government has been not much responsible for fiscal policies for meanwhile. But yes, as you suggested, we have a target of achieving a primary fiscal surplus by next year. But this target may not be met because if the government keeps spending more, especially through the supplementary budget.
When it comes to R&D spending, especially in the semiconductor side of things, which is so important for economic competitiveness against other countries, right? What do you make of these more industrial policies as we're seeing them all over the world, actually, the U.S., South Korea, China, of course?
Yes, from the perspective of the economic national security, it's quite important to develop semiconductor industry. But it should be the private companies that take initiative and more risk of developing this industry. I think that the over-dependence on government funding, like a loan and subsidy, may kind of cause moral hazard. And this might hinder the more sustainable growth of the semiconductor industry. Actually, it should be private companies should take more risk.
It's difficult to sort of have that sort of organic momentum, right, at a time when there's a lot of geopolitical competition, there's a lot of incentivizing initiatives, be it you talk about what the US is spending or what China is spending, right? So is it sort of inevitable that that level of fiscal restraint for this sector, but perhaps more broadly going into next year, kind of goes out the window?
Sorry, me?
And were you able to listen to Heidi's question?
So could you repeat?
Yeah, so Heidi was talking about really when it comes to this spending, we are seeing these fiscal policies and also industrial policies in other countries. So is it inevitable at this point that Japan pursues that?
To some degree, it's going to be inevitable. But we got to see in more long-term perspective. Yes, in the short term, we are kind of competing with other countries over the semiconductor industry. But, in a long-term perspective, definitely what is important is to boost the productivity of the private sectors. And, in that case, definitely we shouldn't depend too much on fiscal policy to develop the semiconductor industry.
It is always so difficult to nudge the private sector in Japan to move along the way that the government wants, right? I mean, I think there has been some change in the mindset, at least when it comes to wage increases. Do you see a sustainable change there that could lead to that inflation that you're talking about right now to be actually sustainable?
Yeah, indeed, the wage increase may be a kind of a turning point for our economy. But wage increase can be sustainable only when the labor productivity improving. But now especially among SMEs, small medium enterprises, labor productivity is remained low. So definitely, priority should be how to push their productivity, so to sustain wage growth.
Enough right now for the BOJ to hike rates, and do you see that in December or in January?
From political perspective, it's going to be hard for BOJ to increase interest rate at this point. So they might wait until the January. But it's going to...
Political perspective, as in domestic politics, or also tariffs and Donald Trump? Domestic politics. Motohiro, Sato, great to have you in the Tokyo studio. Thank you so much. Dean and Professor of Graduate School of Economics at Hitotsubashi University. You can watch part of this conversation. TV Go is your function. You can also watch us live. There you can also dive into any of the securities or Bloomberg functions that we talk about and become part of the conversation by sending us instant messages. This is for Bloomberg subscribers only. Check it out at TV Go. This is Bloomberg. We're getting breaking news out of Japan. We are getting the capital spending numbers for the third quarter, and it's coming in at growth of 8.1% year on year. That's much higher than economists had expected. It's also an acceleration from the previous month, perhaps reaffirming some signs of confidence that the economy is recovering. You're seeing now businesses lift their outlays. When it comes to spending, excluding software, year on year growth of 9.5%, also an acceleration and coming in above economists' estimates. Now, company profits year on year, though, it's a contraction of 3.3% for the third quarter. But when it comes to sales, we're actually seeing it stay supported at 2.6% growth as we continue to, of course, gauge the economic data out of Japan, given the importance for the Bank of Japan this month in deciding whether or not they hike rates. We had already seen some inflation trends strengthening. Now we're seeing capital spending year-on-year growth of 8.1% for the third quarter, which really signals more strength and optimism among businesses. Japan's economic rebound and tourism boom also fueling a growing demand for luxury goods from both locals and tourists alike. That's according to Bulgari CEO Jean-Christophe, who spoke exclusively with Bloomberg's Hasinda Amin about growing optimism in the country.
I think the new generation is really today somehow rebelling against a sluggish destiny, which was more or less the history of Japan up to 5 years ago. You can see again in Tokyo now cranes all over the city, a lot of real estate projects. We are just opening soon, a store in the new district, Abu Zedai, which is very promising. Right. So Japan is entering, I think, a new cycle together with a new generation where people really are more bullish somehow and more willing to enjoy life at its fullest compared to the previous generation. So we see a surge of Japan, combined obviously with a lot of tourism in Japan, and not only Chinese tourism, but also, a lot of American tourism, of European tourism. So Japan is kind of the place to go nowadays for most of the world population. And it's not only yen related. The yen, we know, is quite weak, but also because it's a wonderful country. In terms of hospitality, you even have a Bulgari hotel. So it says long about how good it is to go there. But you have a lot of history, you have a lot of arts, of culture, of gastronomy, and people are very welcoming.
Jean-Christophe, which of your products are seeing the best growth? You're in everything from jewelry to watches to handbags. Which products are selling the best for you in terms of the luxury goods that you're selling?
Well, for Bulgari, it has been a year, I would say, of high jewelry and high-end watches in terms of growth category with the highest growth rate. And we still have some events, till the end of the year, so it makes me optimistic. Then it has been a year, I would say, also very much driven by Stellantis, which is one of our icons. From regular jewelry to high jewelry, it's becoming really more and more, a key symbol of Bulgari, and it is globally attractive to clients, which is rare because often some icons can be very popular in one geography and a bit less in another one. So Stellantis has been driving our business, but not only in jewelry, but also in watches, recording their best year ever, and in handbags, which you were mentioning. So those have been key drivers.
Bulgari CEO Jean-Christophe Babanda speaking to us exclusively. You can hear more from that interview later on Insight with Haslinda Amin. The latest from the corporate front, and Stellantis CEO Carlos Tavares is quitting sooner than expected as the automaker grapples with slumping profit and weaker US sales. The company will be run by an interim committee headed by the chairman, John Elkann. A new CEO will be named in the first half of next year. Bloomberg has learned that Nissan Motor CFO Stephen Ma is set to step down. The change comes 17 months after Ashwani Gupta left as Nissan's chief operating officer and leaves CEO Makoto Uchida as the sole remaining top-level C-suite executive. It comes at a challenging time for the Japanese automaker as it faces declining performance and the attention of one of the most influential activist investors in Japan, Affisimo Capital Management. Well, the market opens in Seoul and Tokyo are coming up next as we continue to watch for what is a busy week ahead with key data and, of course, some more PMI numbers out of China coming out later this morning. We are seeing broadly Asian stocks poised for gains at the start of the week.
This is the Asia Trade. We're counting down to Asia's major market opens. Happy Monday, Haidi, as we now start also the month of December. We're off the best month of November this year for U.S. equities. We're watching the OPEC Plus meeting this week, not to mention eco data as well, like U.S. jobs.
Yeah, that's going to be key when it comes to gauging this next leg of risk sentiment, right? Particularly, as you say, we're coming off such highs, but entering after this month really a period of potential high uncertainty when it comes to global trade and the economic outlook. And of course, at the same time, watching that situation in France as that political division, the fiscal weakness continues to play out.
We have seen incredible strength also for the Japanese yen, perhaps a little bit of safe haven flows, but also the other side of the trade, we have the U.S. dollar pressured with Treasury yields falling across the curve. So we had the first weekly loss for the U.S. dollar in about 9 weeks, and you can see the Japanese yen holding below that 150 level per dollar at the moment. At the open, we're seeing a little bit of upside for the topics, 0.3%, but of course, we are trying to digest still capital spending data for the third quarter coming in better and above economists' expectations and also accelerating from the second quarter. So we continue to see more data indicating a stronger economy here in Japan. We already heard from the BOJ Governor Kazuo Ueda speaking to local media saying that we were nearing potential rate hikes. So we'll be watching what the BOJ does in the month of December. But take a look at how Korea is also coming online. We, of course, had that surprise rate cut from the Bank of Korea last week, and that really sent downside pressure to the Korean won, right now holding at that 13.96 level against the U.S. dollar, as we're seeing the Kospi gaining 0.9%, Heidi.
Take a look at how we're faring just an hour into the trade here in Australia. We're seeing a little bit more upside there, a little bit more conviction when it comes to Australian stocks there, with the ASX up by just about 0.3%. We're seeing some of the gold miners in focus today, particularly Northern Star in focus and De Grey's on account of that acquisition. We are seeing a little bit of a move there, but certainly for Australian stocks, we have been coming off some pretty recent sort of record highs there. Mining gains offsetting some of the losses that we're seeing early on when it comes to financials and the big banks. We're seeing when it comes to Aussie bonds, the 10-year reals headed for that 6-week low, and sort of watching gold prices as well, as that has really been that big rally across this morning. We're watching treasuries there, and as Shery mentioned earlier, so much focus when it comes to these payrolls numbers and how that's going to kind of inform the Fed's way forward, which really so much over the past few weeks has been characterised in that communication as so much caution going into 2025. So the bets on that Fed cut really hanging in the balance there as we wait for this jobs data this week. Our next guest thinks that markets should be bracing potentially for a rotation out of India and Japan. Vikas Pershad, who's an Asian equities portfolio manager at M&G Investments, joins us now. Vikas, great to have you with us. And so, as we sort of start to get into the period where we round out the year, I suppose it's worth reflecting on some of the big market trends. And two of them, of course, have been the market darlings of Japan and India, and then also the undervaluing, I suppose, the lack of interest and appetite for China. How do you think these themes play into the next year? Do you think investors should sort of brace but hold their positions if there is that rotation?
Good morning, Heidi and Shery. And Shery, during the break, I heard you practice in Spanish. It's perfecto. Muy bien. So on Japan, China, and India, three very different markets. My view is that investors should be braced for outflows from these markets into the U.S. When you look at the strength there, we just had a great month in the U.S. We should be braced for that, but investors should be doing the opposite. As we head into 2025, the equity growth stories for the next year and beyond in all three markets remain very strong. In Japan, this is a market that can compound earnings at 10%, 8 to 10% over the next few years. Buybacks, dividends will help that. China, the equity market capitalization contribution to the world is dwarfed by the GDP contribution to the world. There's a huge dislocation there. People are wary of the tariffs that are coming, but these are not the same Chinese companies that were around in 2016 and 17 when the first set of tariffs came under Trump 1.0. These companies are smarter, they're leaner, they're better at capital allocation, and we're seeing lots of opportunities there. And India, this might be the longest tail growth story in the world today among major markets. And 6,000 listed companies, $5.5 trillion market cap. If you look at where the GDP is going, I know we had a hiccup in the most recent month, and we can talk about that. But there will be a GDP multiplier here. The economy will continue to grow. This market is also one that should deliver alpha for investors for the long term.
Yeah, and in fact, that's where we're coming to you in India at the moment, right? What sort of conversations are you having with investors right now who, I guess, want to know, as richly valued as this market is, where do you see the expansion of opportunities from here?
Well, Make in India is very real. This is one of my key lessons from this year. It's how real that is, how pervasive that is, and how much support there is from the government. The semiconductor industry is something that I thought would not be taking root in India anytime soon. But you look at the magnitude of the investments by the government, the facilities being set up in Western India and Southern India, that is very real. But if you look lower end from that, the assembly and manufacturing of components, that will shift to India. It already has. The fact that Apple produces the high percentage of phones in India that it does already, that's a signal that things are moving apace. Also related to Make in India, it's not just selling to Indians, but selling abroad and the export opportunity. I'm in India now. I'm headed to Riyadh for the first time later this week. I'm looking forward to that. Most of the companies I speak to these days that are involved in the manufacturing sector bring up Make in India and selling to Indians, but they also bring up the very large opportunities that are resulting from Saudi. That could be a potential manufacturing hub. Companies that are involved in infrastructure are seeing massive demand from the Saudis. I think it was Bloomberg just last month that carried a headline saying that within the next 3 to 4 years, Saudi will be the largest construction site on the planet. So I'm going to go check it out. Based on what I'm hearing from the companies, that's something that's very real. The last thing I'll just add quickly is on luxury spending. When I moved to Asia 20 years ago, the focus was on the bottom of the pyramid. Now, most of the new exciting opportunities we're seeing are at the very top of the pyramid, where the ultra-high spending is on property, on cars, on luxury items. We just had the Bulgari CEO on before me. So that theme is playing out in India. Hospitals also paying for high-end services, high-end surgeries. That's where our focus is.
Because another market darling this year, as Haidi alluded to, has been Japan, of course. And we continue to see this stronger than expected economic numbers. Just now we got capital spending also surprising to the upside. Come 2025, we continue to see BOJ rate hikes. Could this economic momentum and also market momentum be hindered?
Our view is beyond that, longer term. When we look at the corporate governance transformation underway and what that is yielding, and it's across sectors, it's across market caps even now. It started with the largest companies like Hitachi and Sony and the transformations they went through. But we're seeing it pervade throughout the entire listed universe in Japan and in some of the private companies as well. Our view is if we pick the largest white spaces and we back the best management teams, though we're not ignorant of interest rate levels and FX levels, these best companies will treat this as business as usual, and they will figure it out. Also, what is very heartening to us is the level of engagement that we now have with Japanese companies on all of these issues, and including on diversity, on board structure, on disclosures. So Japan is changing, and though we're constructive on Japan for 2025, our excitement goes far beyond that.
We're also keeping a close eye on all of the concerns around the budget negotiations right now happening in France and, of course, the broader euro economy. How exposed are Asian markets to what's happening in Europe?
So this is something I feel like in Asia, perhaps we don't talk about enough. On the buy side, perhaps with the sell side also. Companies are quite exposed. And if you look at machine tool companies in Japan, listed machine tool companies in Japan, the leading companies have 30 to 40% exposure to Europe. If you look at some of the auto parts companies in India that are listed, they also have 30, 40% of their revenues coming from Europe. The situation is not great, and it's global. So if we start with the largest manufacturing sector in the world, the auto sector, I opened Bloomberg this morning to see Nissan CFO has resigned, the Stellantis CEO has resigned. There's pain on the ground in Germany, in particular, in the auto manufacturers there, but it goes beyond that as well. So if we start with the largest manufacturing sector in the world, in autos, the situation is not good, and that does include CVs, that does include auto parts. It's not just passenger vehicles. And that brings us back to China. The Chinese EVs are benefiting. Clearly, we've seen that. That supply chain is benefiting. And there's a broader set of benefits accruing to Chinese companies in manufacturing, in the semiconductor supply chain as well. We can talk about that now or perhaps later, but there's a lot to discuss about China as well.
And because we started this conversation and you mentioned how I was practicing my Spanish earlier before we came on the air. I follow LatAm stocks in Latin America very closely, as you know. I know that you don't follow them very closely, but when we talk about China and the broader emerging market scheme, how important will the offshore yuan, for example, be in the anchoring of expectations around emerging markets come 2025, especially when you have another big player with Trump 2.0 coming with really this idiosyncratic news that could come out from that administration?
Well, I'm going to contradict myself briefly and say that we tend not to focus too much on FX levels, but the yen and the yuan and what's going on there, we do pay attention. And the yuan anchoring you're talking about, we'll see the ramifications of that next year. Now, on LATAM, it's fascinating to look at time series data of who the largest trading partners are for countries in South America and how that has evolved and shifted away from the US and moved towards China. We're seeing the same thing in the GCC, Saudi in particular, and how important China is to these economies. So it's not something I spend too much time thinking about every day, but Indian companies are setting up manufacturing there. We know that Japanese and Chinese companies are setting up manufacturing there, so we do pay attention to it. On the services side, on e-commerce, pharmaceuticals, we're seeing some wins, some losses on that front. But Latin America will become more and more important, and keeping an eye on the yuan as we head into next year, also very important.
Vikas, Pershad, always good to have you with us. Asian Equities Portfolio Manager at M&G Investments. Great to have you with us. Take a look at some of the big movers in the Asian session. We've been watching Nissan very closely after their chief financial officer stepped down. And this, of course, as we continue to see these issues pop up in this automaker, we're seeing the gains right now up 0.3%. But the financial officer, Stephen Ma, is set to step down from his position, according to People's speaking to Bloomberg, and yet we're seeing another executive change at a challenging time at Nissan. Fast retailing down more than 3%. We were monitoring the stock very closely after its chairman Tadashi Yanai's comments about not using Xinjiang cotton sparked online discussion in China. And of course, we always watch those potential boycotts in that country very closely. Korea zinc at the moment surging 10%. This after we heard from a local media that the company will be holding a board meeting as early as December 3rd and is planning to hold an extraordinary shareholders meeting on January 23rd. We continue to watch the fight for control in that company. We have more ahead on the Asia trade. This is Bloomberg.
The French Finance Minister Antoine Armand says he won't be blackmailed over the budget. Speaking exclusively with Bloomberg, he says he's still committed to hitting the government's 5% budget deficit target next year, even after warnings that an amendment would cost over $10 billion.
We respect each and every MP, and we respect each and every people in France, whatever they decided to vote or not to vote, of course. But what's my responsibility as a finance minister is to commit to the 5% target that we decided to have at the beginning of our mandate, not only for France or for the government, because it's now needed in order that Europe still remain a country, a continent of prosperity. That's what we aim at. And for that, we need all political leaders to be responsible.
With these concessions that we've seen in the budget, they're going to cost about 10 billion euros. Does that mean you can actually keep this 5% deficit target? Or do you believe perhaps it will be slightly higher, like 5.5 or perhaps higher?
As I told you, our commitment to reduce the budget deficit towards 5% in 2025 and towards 3% in 2029 is not an option. It is something we are very carefully looking at. What does that mean?
But can you actually fulfill this?
Yes, it means that at every time that we made adjustments on our budget, we compensated it with saving, with new measures. It's clearly an important point to underline here. We are committed to this 5% target in 2025.
French Finance Minister Antoine Armand speaking exclusively with Bloomberg's Caroline Conan. Take a look at how European futures are coming online in the Asian session. We actually saw stocks gaining ground on the Friday session, being led higher by tech and resource-related stocks. Right now, we're seeing some downside pressure for stocks 50 futures at the moment. This, of course, as we had those comments by the French Finance Minister, and we continue to watch really the 10-year yield premium over Germany's topping that 80 basis points as we continue to see that risk-off mood across Europe. Let's bring in Bloomberg's MLive strategist Mark Cranfield for more on the market action in France and what to watch in the FX space this week. And first of all, Mark, great to see you in person in the Tokyo studio after all these years. This is exciting. And Europe, we saw the euro seeing its worst month in over a year or so. Just more downside pressure given the risks.
Yeah, happy to be here, by the way. FX traders and bond traders can't believe their luck. They thought that December might be a quiet period running into year-end. And no, the French have decided it's not going to be at all. So the bond traders will be very happy to hear that France wants to take it down to the wire in terms of negotiating over these budget differences. So we're set for a very lively day. The French futures, bond futures, will trade before the European Open, but there won't be a lot of volume there. They'll be relatively low, but we'll see the French bonds probably trade a bit weaker on the futures market. But the real action begins once the European cash markets open, and people will be watching that spread between Germany and France very closely, see whether it goes above 100 basis points. And we've seen many times before is that the French, they like to take these things down to the last minute. So we'll probably get some market dislocations first, eventually a compromise, everyone dials everything back. But let's see how it plays out, because S&P Ratings Agency last week, they already left France unchanged. They did not downgrade them, which now maybe people will think is maybe a little bit too early to judge this situation. Whatever happens, we're going to have plenty of volatility in the bond market. That's also translating into the euro, which is pretty weak this morning as well. Everybody's happy. It's not going to be a quiet December.
And to be fair, I'm not really expecting any more quiet days now that we have President-elect Donald Trump. And over the weekend as well, he's talking about BRICS, you better not veer away from the US dollar? I mean, it's not like that's going to make a difference, but how significant is this?
I don't think traders are putting too much weight on that. He says a lot of things. Yeah. This may be just him saying something off the cuff, whether there's too much behind it. I mean, overall, the US dollar is already the biggest currency in the world. People are not going to veer away from it suddenly. They're not going to change their mind just because the BRICS countries, for some time, they've been adopting some of the others.
Like Brazil, they were using the offshore yuan and so forth, right?
Yeah, people have been veering away to try and use other currencies. Even the euro has gained a bigger weighting as well. So there's nothing new in that respect. But that's been going on for many years. And if you look, the US dollar is still the most widely held. So many commodities are priced in US dollars, so many other assets. It's not suddenly going to change. Probably people won't think too much about it unless he actually attempts to do something in terms of some specific measures that he tries to force people into there. But otherwise, it's probably more like talk, and there'll be plenty more from him to keep us busy, I'm sure.
Given how much caution we've heard from Fed speakers, how impactful are those payrolls numbers going to be? And also, I'm wondering if that's more influential or less influential than the takeaway from the BOJ interview.
I suspect this week the Bank of Japan carries more weight than anything that comes out of the Fed. That is very, very significant that Governor Ueda actually did an interview with the Japanese media. It looks very much as though, or certainly the way that traders will interpret this, is that Mr. Ueda himself is very convinced that an interest rate hike is needed as soon as possible, and they have a meeting coming up in a couple of weeks' time, so he's obviously thinking about December. The question now is whether he can persuade enough of the other members on the committee to cross the line and vote in favour of the hike now, or is it going to be deferred until next year? That's the big question. Markets will see this as a very hawkish step. The fact that he's willing to go public with some of his comments at this time, so close to another Bank of Japan meeting, is a very significant step. You'll see that play out in the yen and the Japanese bond markets. It will support the yen. We already saw it starting to happen last week. People were getting quite serious about the chance. We saw more than a 60% odds price for a rate hike in December. We're going to see the Japanese bonds, probably the yields trade high. They've got two auctions to get through as well this week, 10 years and 30 years. It's not going to be an easy week for Japanese bond traders. Let's see whether more BOJ voices come out to support what Ueda is saying. But it looks pretty clear to everybody. He's there. Can he persuade the other people to get on board?
I really have no idea where the yen will go in 2025. I mean, I understand that we will see potentially a strengthening trend, but the people that we speak to go from 140 to even 130s. What are you hearing?
Yes, I mean, I think those are the kind of numbers. And what people will be looking for, investors will be looking very closely to where Japanese companies estimate as well, because every year they give their forecast for what's kind of a break-even level for them. This year it was somewhere in the 140s. If they shift those break-even numbers down into the 130s, that's a big step. And people will see that as being confirmation that the Japanese companies themselves see the yen strengthening quite a bit. So let's see how that plays out. But certainly when you look at the price action and the possibility that Japan may well lift interest rates, say, to 1%, that's a big step. So yes, it would be surprising if the yen doesn't strengthen during next year.
Mark Cranfield, always good to have you with us, especially now that you're visiting the Tokyo studio. We'll have Mark throughout the entire week here in the Tokyo studio. What a treat. Bloomberg's M-Live strategies there. We do have breaking news at the moment. We are now hearing that Rakuten is hiring banks in order to offer perpetual dollar bonds. And remember, Rakuten has been trying to fundraise for some time right now. They do have to cover 2025 bond maturities. They've actually sold 15% of its card unit to Mizuho just recently in order to bolster liquidity. And we're now hearing that Rakuten is hiring banks in order to offer perpetual dollar bonds. So we'll continue to watch those lines crossing at the moment. We're hearing that it could be $500 million in perpetual bond offerings. You can follow more on all of the day's trading as well on the Markets Live blog. That's on the Bloomberg at MLI Vigo. We have more ahead. This is Bloomberg.
Let's get the details on a couple of Bloomberg scoops. Leadership shakeups at Stellantis and Nissan as a number of auto industry executives around the world come under pressure. Bloomberg's Global Business Asia editor, Peter Verco, is with us. So we'll start off with Stellantis first. What's going on there?
Yeah, so Bloomberg got a scoop on Sunday morning that the CEO, Carlos Tavares, was about to resign. That was confirmed by the company about an hour later. Quite unexpected. There'd been a bit of pressure on him throughout this year, and Stellantis had said in September that it was starting to look for a successor for him. His term was due, or his contract was due to expire in early 2026, and he said he would stay on until then. But it seems that in the last couple of weeks there's been a breakdown or a deterioration in the relationship between Stellantis and the board, and the news came out that he was leaving with immediate effect.
And we're also, I mean, at Nissan, this is kind of just the latest in a string of exits, really.
Yeah, Nissan has had a lot of executive upheaval in the last year and a half, and really ever since the whole Carlos Ghosn affair has been in a lot of turmoil and never really recovered from that. So the news there is that the CFO is stepping down. It's not exactly clear yet whether he is leaving the company completely or moving into another role there.
How broadly challenging is it across the sector, particularly as we kind of go into the unknowns of next year?
Yeah, well, I think that the common thread here between Stellantis and Nissan, even though they're both very different companies, is that they're both automakers that have really struggled to cope with the rise of the Chinese automakers, with the shift to EVs, and also kind of like this sudden spurt that we've seen in hybrids. They're both stuck with a pretty dated lineup of models that has made it hard for their dealers across the world to sell. Stellantis in particular, in the US, the dealers there have been really angry and have been calling for Tavares to go for quite some time because they feel they've been left with this lineup of pretty aging cars that they're still being trying to sell at high prices for their margins. So, yeah.
Our Global Business Editor there with the latest. Take a look at some of the breaking data that we're just getting across the Bloomberg when it comes to Australia. And we have been watching some of these indicators pretty closely, given a bit of debate over how quickly the RBA could move. The latest ones that we're looking at are really the retail sales and building approvals numbers. When it comes to retail sales, that month-on-month number coming through at a gain of 0.6%. That is moderately higher than expectations of 0.4%, and certainly picking up the pace when it comes to the pretty stagnant move of 0.1% in the previous reading. We're also seeing building approvals really picking up 4.2% there over expectations of 1.3%, and losing a little bit of traction in the very strong numbers of 4.4% that we saw in the previous month there as well. So we have had these sort of readjusted expectations when it comes to the RBA in particular. A number of banks now just really expecting the easing cycle to not just be delayed compared to the rest of the region and the rest of the world, but also to be a shallow one. The likes of ANZ, for example, expecting cuts not to come through until May of next year. And Shery, we are getting some more breaking news at the moment crossing the Bloomberg.
Yeah, I want to get you to Asia's PMIs, but right now we're first seeing that the U.S. President Joe Biden has issued a pardon for his son, Hunter Biden. And we had seen some reports already about this plan to pardon his son or potentially commute a potential prison sentence. But now we're seeing some confirmation that he has, in fact, issued a pardon for his son, Hunter Biden, as he's now in his final couple of months in the presidency. We have been watching, of course, the potential for a pardon. Back in June, the president said that he would not pardon or commute the sentence for his son since he was convicted of 3 separate felony charges related to the purchase of a revolver back in 2018. But in the last few days, we had seen some reports from sources talking to local media that he potentially do that, and we're right now seeing that breaking news at the moment. But as I mentioned earlier, we are getting the Asia PMIs as well, and it seems that Japan's PMI numbers have also turned positive. coming in at 49 at the moment. In fact, they've not turned positive as of yet, but we're still in that contraction territory, and that's a final number for Japan. What has turned positive, South Korea. You can see there above that 50 threshold of contraction and expansion after 2 months of contractionary territory. South Korea we've been watching very closely because we also had the export numbers over the weekend actually showing that we saw some recovery in the exports in the latest month for South Korea. Take a look at how equities are trading at the moment, because you can see some of those major manufacturers gaining ground in the Korean session, and the Kospi up 0.6% after we had South Korea's exports returning to growth in November, and really to do with strong demand for semiconductors. The Nikkei still down 0.4% as we continue to see a stronger Japanese yen against the US dollar. We'll be watching the offshore yuan as well, because we also had more data from China, the official PMI numbers coming out over the weekend showing that gradual improvement in the economy was really prevalent in the latest data set. This, of course, after that broad stimulus package helped reverse months of contraction. Let's bring in our China correspondent, Min Lo. So how encouraging were these numbers, Min?
Yeah, it's the second month of expansion when it comes to the manufacturing PMI. So the number came in at 50.3, up from 50.1 the previous month. But bear in mind that we typically do get a bounce in November of between 0.2 to 0.3 points, because October was a short working month because of the Golden Week holiday. So if you strip away that seasonal fluctuation, it does appear that it doesn't look like the economy is gearing up that much. And when you look at the non-manufacturing PMI, that fell, missing expectations, coming in at 50, the threshold between contraction and expansion. Services PMI, not much changed, but there was an unexpected drop in construction PMI data that shows that, that is still not picking up, raising some questions around whether infrastructure investment led by the government is enough to boost that number there. And if you look at the other sub-indices, like the employment gauge, that deepened contraction, again showing that factories may not be so keen to hire just yet, and the input-output prices continue to decline as well, showing that deflationary pressures are still at play here. So overall, quite a fragile recovery that we're seeing.
And certainly a great deal of fragility still being shown when it comes to the property sector, right?
Yes, the home sales data, at least preliminary data of sales from the top 100 biggest developers that we got in November, shows sales declining by nearly 7%. That's reversing the gain of about 7% as well in October. And if you pull back and look at the long-term horizon, it's starting to look like maybe October was that one-hit wonder, bucking the 16-month trend of contraction there. It's been in double-digit contraction for, since June of 2023. Bear in mind, though, that the latest number in November, that 7% decline, that's a single-digit contraction, much smaller than the scale of the rate bars in the previous month. So we are seeing some modest recovery there, but again, a very bumpy road, showing an uneven recovery. And it's really the great challenge of Beijing to ensure that this recovery momentum sustains over the longer term.
China correspondent Min Lo there with the latest. And of course, China is front and center when it comes to luxury brands. And Bulgari CEO Jean-Christophe says the country's struggles could take several years to resolve as the nation transitions to a more services-based economy. He spoke exclusively with Bloomberg's Haslinda Amin about their plans in China, as well as a potential impact of Trump's tariffs.
When you have a crisis which is based partially on real estate, but more, I would say, exactly on oversupply, not only of real estate, but of many manufactured goods, which are too many to be absorbed, not only by the local Chinese living in China, but also internationally by Western consumers or Asian consumers. Obviously, this cannot be resolved overnight, because oversupply is also related to a certain infrastructure, to certain kind of investments which have to be reshifted towards different industries, probably more services and a bit less of traditional industry production. So we can anticipate that the crisis in China may continue next year, as the country will need, I think, a couple of years at least to absorb that oversupply of manufactured goods and real estate, and to evolve quickly towards an economy which is more a service-oriented economy, rather than an economy also much more in some advanced technologies, which they are already, but they can do for sure more, in order, to reestablish a balance between supply and demand, which today is challenging.
Jean-Christophe, are you then looking at opening more stores in mainland China in 2025, 2026? What's your expansion plan?
In Greater China, generally speaking, we have about 50 stores, so I would say it's quite a solid network covering the main cities, the main malls in rather good location, I have to say. So our first priority for this year and for next year is not necessarily, to open new stores, because I think that our network is so covering quite well mainland China. But to get more productivity from those stores on the one hand, and on the other hand, to further develop an area where we've been pioneering the market, that is e-commerce, not only the e-commerce we do from our website, but the e-commerce we do in concession with the likes of Tmall, with the likes of JD. And this is obviously reaching cities where we don't have stores and where we don't necessarily need to establish stores because they are not having the proper mall for luxury. On the other hand, they have the proper clients for luxury. And so obviously e-commerce is a smart way to reach those clients, to make them enjoy the Bulgari experience without necessarily having a boutique in each and every city of China above 5 million people.
So Bulgari CEO Jean-Christophe Babin there speaking exclusively with Insight anchor Haslinda Amin. Well, debate is swelling over how far President-elect Donald Trump will follow through on his tariff threats. And that's the focus of today's Big Take, with Bloomberg Economics mapping out a scenario for what could lie ahead. Our news desk editor, Jill Desis, joins us now for more. And so, Jill, we've already seen, way before he even takes office for the second time, a lot of to and fro in terms of expectations, what he could deliver, how much of that could be potentially negated by, what he sees as good deals with trading partners. So how do we kind of model this with any degree of certainty?
Yes, that's right. First of all, I think, it's important to point out here that it is very difficult to predict any level of uncertainty when it comes to Donald Trump. That's really what he's known for here. Just out of the gate last week, he already announced that he wants to, implement additional tariffs on not just China, but also on Canada and Mexico. A lot of this, he says, is connected with his concerns over the fentanyl crisis and their inability to, as Trump frames it, to prevent drugs from flowing into the U.S. What Bloomberg Economics has really done here, though, is kind of taken a step back and saying, okay, when you actually take into account not just the bluster that's coming out of all of this rhetoric, but also what it would actually mean to implement tariffs, what does that look like? Their base case is essentially calling for 3 waves of tariff hikes starting in summer of next year. What that would mean, though, is that levies on China ultimately triple by the end of 2026. So you're looking at tariffs that are somewhere in the neighborhood of around 40% or so on China, much higher than they would be on the rest of the world. I will say, though, that what Bloomberg Economics is kind of taking into consideration with some of this calculus, even if you do see a rise, that significant rise on tariffs on China, but also some on the rest of the world, is that they're saying it's likely those would be targeted toward, goods that aren't necessarily front and center with the consumer. So maybe you don't see some of that immediate price impact, but you're still going to see probably a rise in prices at some point along this curve here. And then also, the big takeaway here is that the share of global trade that the U.S. contributes ultimately shrinks somewhat in this kind of scenario.
How much is Bloomberg Economics taking into account the shape of his economic policy team, including, of course, the nomination of Treasury Secretary Scott Bessent?
Yes, of course. That's a huge consideration. So what Bloomberg Economics is pointing out here is that, yes, you do have to look at what actually trade policy looks like in this Trump administration. Scott Bessent, so he's the nominee for Treasury Secretary, he's actually seen, it's more of like a steady hand, somebody that can actually buffer some of the, the bigger effects of a lot of this big rhetoric that's coming out of Trump. Whether that actually happens obviously remains to be seen, but it's important to remember that, he is, taking, it seems, a little bit more of a pragmatic approach here. But then you also have to take into account everybody else that's in, the Trump administration. His nominee for the trade representative is a protege of his former USTR rep, Robert Lighthizer, somebody that's much more protectionist when it comes to these kinds of things. Once you combine that with all of these different personalities happening in commerce and elsewhere within the administration, you're looking for, likely some kind of political jockeying for somebody that has the most influence under the Trump administration. And all of that we can really only know once those picks, if they're actually confirmed for the most part, the ones that actually have to be confirmed, once those come to fruition and how those people interact with each other within the White House.
Bloomberg News Desk Editor Jill Deasy is there. Thank you. And you can read more about that story in today's Big Take that's available for subscribers on the terminal or online at Bloomberg.com. We have more ahead on the Asia trade. This is Bloomberg. Take a look at how Japanese assets are trading at the moment. We're seeing broad pressure for the Nikkei, which is down 0.6%. We continue to watch the two-year yield at the moment, which has now risen to the highest level since 2008. Investors still trying to digest some economic numbers, including Japan's capital spending data, which accelerated and came in above estimates for the third quarter, sort of an indication perhaps that the groundwork is being laid for the Bank of Japan to be able to hike rates this month. We already had some Tokyo CPI numbers last week accelerating and boosting the Japanese yen. We are going to be watching Japan's wage growth for Friday, that data out on Friday, for more indications of where the BOJ might be going from here. We already heard from Kazuo Ueda in a local interview talking about nearing those rate hikes. You can see the yen at that 150 level. Deal makers and activist investors have been injecting activity into Japanese equity markets, underscoring how frenetic trading on the Tokyo Bourse has become this year. Recent examples include Elliott Management's interest in Tokyo Gas. Following that, Japan's biggest utility gas provider said that it would consider a variety of measures to unlock the value of its real estate assets. Our next guest says Japan is now an attractive and target-rich environment. Nicholas Benesch, CEO of the Board Director Training Institute of Japan, joins us now. It's great to have you with us. So, do you expect this favorable environment for foreign investors coming into Japan to change depending on where BOJ monetary policy goes from here, if we see a significantly stronger yen?
I see a significantly stronger yen over a long-term forecast, but I don't see it immediately happening. I do believe the changes that you alluded to about active investor involvement and activist investor involvement will continue to improve the market, but in a sort of spotty way, because what we have now is a market with increasing disparities in it. You have those companies in, say, the Topics 150, which has outperformed the overall Topics significantly, particularly recently. So the very best, high stock price, they performed well over the last 10 years. Companies are continuing to do that. They're already good. But that's only 150 companies, and you have a large number of companies that are down at an average, price book ratio of 1.3 or something like that, and one half of companies listed on the prime stock exchange are at a price book ratio of less than 1. So we have very spotty performance, and it's still a stock picking market.
Is it really company specific, or are we seeing sectors where we're seeing more activity?
You're seeing specific companies, not so much sectors, I think, but specific companies. And yes, it does help if they're in a high-flying, demand-growing market like semiconductors and that kind of thing. But There are also companies in more humdrum sectors like human resources or consulting and that sort of thing, which are doing quite well. I wouldn't say it's so sector dependent as it is governance and management capability, and the ability of management to improve its skills and keep up with the world and realize that changes need to be made in the balance sheet, and non-core assets need to be divested sooner, non-core subsidiaries as well. They have to inject governance and good management and finance knowledge into the subsidiaries, as well as their own managers. People who realize this, or have been realizing over the last 10 years, are continuing to perform well. And they, are in the large part of those are the Topics 150 I mentioned. But we still have a lot of other companies that are down way below 1%. So 1/2 of prime companies are at a price book ratio of less than 1. So if you think about that, it means that you've got a lot of companies down there with 0.7, 0.6, 0.5 that are dragging the average down to less than 1. And this is also reflected in the voting ratio, the support ratio of CEOs. Traditionally, active investors and activist investors sort of punish badly performing companies by not voting for the CEO. And the CEO support vote ratio for prime listed companies has come down over the last few years from over 93% to 90% or even less. So what that indicates, since the top is 100%, you can't go higher than that. It indicates there are a lot of companies down there where the CEO is only getting 75% or 60% or 80% support vote from investors. That will, over time, have a big impact on their mentalities, but it'll take a lot of time because they didn't get there by being good performers in the first place.
The sort of receptiveness of companies and boards and CEOs is such an interesting one, right? Do you think you're seeing a broader kind of attitude shift there, or is there still quite a lot of reluctance?
Well, the good performers are, I wouldn't say they're, ecstatic or super happy about all these changes and more active voting by investors. But they are quite willing to take it in their stride and to compete with other good performers to show that they are training their directors and their executives properly with modern finance techniques and new thinking about strategy and how to refine the business portfolio and that sort of thing. So they're taking it stride and keeping up. And they're the kind of companies that hire our institution to do director training, I would say, because they realize they want to improve themselves. They don't really mind. And they realize that if an activist would by chance step into your door, you should probably lend an ear to a lot of those requests or suggestions, because a lot of them may make sense. That's been a big change in the corporate culture environment here over the last 10 years since I got the corporate governance code started in discussions with key diet men and before that the BOJ. In the mentality of CEOs and executives towards activism. But then you have a lot of other companies where the initial answer is always no, and they dig their heels into concrete in response to requests from activists or even from active investors and don't do anything. So, they prefer the status quo because it's easier, and it's a lot easier also, even if they're not particularly, against what's being proposed. It's a lot easier to kick the can down the street and hope that the next group of management can deal with the difficult problems, because you're going to be out of here in 2 years.
Nicholas, really great to have you with us. Nicholas Benesch is a CEO at the Board Director Training Institute of Japan. And you can watch us live and see our past interviews on our interactive TV function. That's at TV Go. You can dive into any of the securities or the Bloomberg functions we talk about, plus become part of the conversation as well. You can send us instant messages during our shows. This is for Bloomberg subscribers only. It's at TV Go. This is Bloomberg. Take a look at one big move that we're continuing to watch, and we're seeing that big spike in zinc there. And in fact, that is off the session highs that we saw previously. It gained as much as 30% to the highest intraday level since October 29th. We're seeing trading volumes also surging there as well. After the Seoul Economic Daily reported the company will hold an extraordinary meeting of shareholders on January 23rd to vote on the appointment of new board members as recommended by the Yongpong MBK alliance. Korea Zinc says it hasn't made a decision when it comes to the date of the EGM, but this reporting sending a big move through this stock. This as the chairman continues to work to try and claw back shareholder trust after being forced to scrap that $1.8 billion share sale last month. Shery.
And Haidi, we're seeing big moves in the currency space with emerging market currencies taking a big hit after President-elect Donald Trump demanded that commitment from BRICS on using the US dollar, the Thai baht leading the losses in the Asian session, while you're seeing the South African rand also lose more than 0.5%. That's it from the Asia trade. The China show is next. This is Bloomberg.